Why are they doing it? Well, the whole part of this previous episode, I said why. People are de-dollarizing. The United States is doing stable coins because the world's de-dollarizing. The rest of the world may be involved in stable coins, but they're not doing that, are they? And they'll have CBDCs. But their internal wealth they're doing through what? Gold. And they're democratizing the gold markets to reset prices because they don't believe the prices that we have in the West. I've said manipulation. People think I'm crazy. We have the government of Russia, the second largest producer in the world, in articles publicly stating they don't trust the prices. They're building their own exchange. They're nationalizing the gold mines. They're internalizing it, and they're not letting it get out. And they're going to service the rest of the world who does not believe in the gold price. Why did they say that? Because they know it's manipulated in the West. Hey everyone, this is 𝙎𝙐𝙋𝙋𝙊𝙍𝙄𝙇, your host with the Freedom Report, and today we're going to talk about gold and the big changes that have come about in the Russia gold market, what that means for Russia, and also what it means for what's happening in the gold market around the world. You're going to want to hear this because it's going to affect you. It's going to affect your prices. It's going to affect what's available on the exchange, and it's also affecting how the world sees gold and how the world sees the dollar. And that's really the theme of what we're going to be talking about today. So we're just going to jump right into it, and we're going to talk about what is the Russian gold market. So we'll talk about what is the Russian gold market, what are they doing, and what we should expect to see. So if we go over here to the OEC, we look at some facts about Russia. Their exports are currently, as of 2023, the data is 13.6 billion. The top destination goes to Hong Kong, 5.21 billion of that, so over a third. Hong Kong is famous for jewelry, but there's also other gold trade there as well. And then India has risen up to be one of the fastest growing markets, and that they've increased 223 million. Well, that is until China just got involved, which we'll get to here in a moment. As far as the share of global exports, export-wise, Russia produces 2.37% of the gold. Now, in terms of actual gold production, they're one of the world's largest. So they don't export a lot, they keep a lot, and that's key, but that's also changing, and we'll get into why that matters. They do import a little, but for the most part, they really deal in their own domestic gold market. Most of it stays inside. Some's exported, a big chunk to Hong Kong for jewelry and coins and bars and things like that. And then Russia is starting to diversify its trade and gold to the rest of the world. We'll explain why that matters. News here from Kitco. Russian precious metal sales to China up 80% to $1 billion in the first half of 2025. Russia's precious metals exports to China nearly doubled in value the first half of 2025, according to the latest trade data. I'm here reading from the article from Kitco. Quote from Kitco: Chinese imports of Russian precious metals ores and concentrates, including gold and silver, jumped 80% to $1 billion from the same period a year earlier, Bloomberg reported Monday, citing data from Trade Data Monitor and China's Customs Office. Bullion prices have climbed about 28% this year, boosted by heightened geopolitical risks and trade tensions, alongside buying by central banks and exchange-traded funds, also known as ETFs. The article goes on to say Russia is the world's number 2 gold producer. I said that they're very large. They're second only behind China, and with an annual output of over 300 tons. Russia's central bank was also one of the world's biggest sovereign gold buyers, but its purchases have fallen off since the full-scale invasion of Ukraine in 2022. I wanted to note that while the central bank's purchases have fallen off, the sovereign wealth fund and other purchases in Russia haven't, and so Russia is still investing in it. It's just a little bit less on the publicly available central bank books. There could be a bunch of reasons for that. The People's Bank of China continues to be among the leading central bank buyers in recent years. And you can see from this chart that the January to June imports of precious metals, ores, and concentrates other than silver has risen. China is buying more Russian gold and silver. Now China's buying silver, but buying a lot of gold too. And that gold trade has really accelerated since 2022. You can see 2023, 24, and 25. We're now seeing much higher amounts of gold trade between Russia and China, much more than they've had in the last 10 years. And this trend is increasing over time. So Russia fully intends to utilize its gold market and with one of its trading partners. Now, if China is the #1 gold producer in the world, why are they buying so much from Russia? Well, that's because China sees the importance of gold in the upcoming changes in the economic system and the financial system and the currency system. And so not only does China basically keep almost about 99% of its own domestic production as the #1 producer in the world inside, but they're also buying it from Russia. What does that tell you about what China thinks about the importance of gold in this new economic environment? And Russia is now starting to tag along. We'll get into that in a moment, how Russia is developing its own internal market and offering a competing exchange with the LBMA. The country's gold miners are also supporting rising domestic retail demand. It continues in the Kitco article, which hit a record high last year as Russians clamored for precious metals to protect the value of their savings. Russian consumers purchased 75.6 tons of gold in 2024, representing approximately 25% of the country's annual production. Would that would happen in the United States, we may actually have more answers for inflation if United States citizens have been buying 25% of the gold output of the US, but I digress. This video is about Russia. The more recent rally in other precious metals has also boosted revenues among Russia's top miners. MMC Norilsk Nickel PJSC, one of the world's top producers of palladium and platinum, has ramped up exports to China this year, the report noted. Prices for the two metals jumped 38% and 59% respectively this year. Russia has been making waves in precious metals markets since sanctions that followed their invasion of Ukraine in 2022 have forced the country to rely ever more heavily on precious metals, crypto, and other alternative assets. Last week, journalist Tim Treadgold reported that silver prices may be benefiting from undeclared but substantial buying by Russia's central bank. We'll get into silver on the next precious metals episode that I do. I want to save that for next time because the silver market is really beginning to heat up, but it started about 18 months in gold. So let's cover gold. Now, a nice, interesting article here from CNBC. This is back on July 15th, about a week ago. Central banks are increasingly buying gold from local mines as price surge. Now, this is a very important article as it relates to Russia, and I'll make that connection in a moment, but let's dive into this article a little bit and see the pieces that we can glean from it to understand the role of gold in Russia. Okay. According to the article by Li Yingshan on CNBC, local purchases can save costs for central banks against the backdrop of elevated gold prices. It's also a way to support local industry and bolster forex reserves. Now, the article is going to go into why countries want to buy locally versus going to the 𝙆𝙄𝙀𝙗 or the COMEX. And I'm going to toss in my theory on top of that as well, according to what they said. So let's get into that in the article. It says here, according to CNBC, quote, central banks are increasingly looking to bolster their gold reserves. And they're turning to mines in their backyard to source the yellow metal. And the only issue I have with that sentence is it's not yellow, it's gold. I realize it's a nickname. Let's call it what it is. They're buying gold. Besides being cheaper, securing gold directly from mines helps support local industry and bolsters reserves without weighing on foreign exchange reserves, experts said. Or if we flip that around, it means if you don't want to hold dollars and buy gold with dollars on these international exchanges, what do? If you want to stop carrying as many dollars, you have to go where? An alternative exchange and to local miners, which is all about what this report is about. See, it's not just about the gold. It is about the gold, but it's also about continued de-dollarization in international trade and currency transactions. For the first time a couple of months ago, foreign reserves of currencies, the dollar was less than 50%. And the first time I can remember ever looking at that statistic. And the gold play is how Russia has, one, been getting around sanctions, but also, two, dumping the dollar and supporting its currency and its trade with its partners, the BRICS nations, in gold, which is natural money. Continuing in the article, while countries such as the Philippines and Ecuador have been doing this for years, more central banks with access to domestic gold mines have started, increased, or are considering direct local purchases, according to the World Gold Council. 19 out of 36 respondents in the World Council's latest central bank survey, the 2025 one, said they are buying gold directly from domestic artisanal and small-scale gold miners in local currency. 4 are thinking of following suit. This is a slightly higher figure than last year's survey, when around 14 central banks out of 57 said they're buying directly from domestic sources. Quote, one trend that we're seeing is that some central banks, especially in Africa, Latin America, are starting to buy gold directly from domestic, small-scale gold mines, which have really proliferated because of the higher price, said 𝙎𝙐𝙋𝙋𝙊𝙍𝙁𝙄𝙇𝙄𝑼𝙏𝑒, global head of central bank at WGC. Central banks of Colombia, Tanzania, Ghana, Zambia, Mongolia, and the Philippines are relying on domestically mined gold to build up reserves, according to the industry body. The Ghana Gold Board, the state agency managing gold purchases on behalf of the Bank of Ghana, in April secured agreements with several mining companies to buy 20% of their gold output, Reuters reported in the CNBC article. And last September, Tanzania's mining authority reportedly mandated that all gold exporters, including miners and traders, put aside at least 20% of their output to sell to the central bank. You see the trend here. Gold is going up in value, as you can see on this chart, relative to the dollar. Countries are buying locally, not having to have as many gold reserves. That's about de-dollarization. And I'm going to talk to you next about how there's some nationalizations of output going on, and there are new exchanges coming on board as the rest of the world moves to have their own gold trade away from the West, and to also start dumping the dollar more and buying their gold in their local currencies from their local suppliers. You can make an argument that it's cheaper than buying gold on the international market because a lot of these central banks buy gold at a slight discount to the international price, Fan said in the CNBC article. Traditionally, central banks acquire gold through global over-the-counter market, typically centered in London, where gold is transacted via major bullion banks, priced in US dollars, euros, or sterling. These purchases often involve high-purity London gold delivery, or LGD bars, which meet global trading standards and are stored in top-tier vaults, such as those at the Bank of England. Because of gold soaring prices and attractiveness as a hedge against geopolitical risk, it's natural that central banks and producer nations would turn to domestic output, said Adrian Ash, director of research at gold investment firm Bullion Vault. Gold prices have been on a tear, scaling fresh highs amid geopolitical uncertainties and waning confidence in other traditional safe havens, translation, U.S. treasuries and the U.S. dollar, as well as other sovereign bond offerings. There goes both the currency and the bond markets, ladies and gentlemen. They're saying it right there in black and white. Please pay attention if you're carrying a lot of dollars in a bank account or you're carrying a lot of bonds in your investment portfolio. Pay attention to what the world's central banks and sovereign nations are doing, because it could be instructive as to where the prices on these various assets are going and where the trade is going. And you may want to at least think about following suit. You're able to grow your reserves using local currency and therefore not sacrifice another reserve asset, US dollar, to grow your gold reserves. In other words, people want to hold on to their dollars, but really they want to hold less of them. That's the key. Countries need to pay for processing or refining. The de facto international benchmark for large gold bullion, the London gold delivery bars, these processes need to be done overseas. So you see a lot of export to Hong Kong, the Swiss, so on and so forth, to have that done. Central banks that buy gold bars from local mines have domestic LGD refining capacity, nullifying those additional costs. So now you can see where if they build the refining in-house, they don't have to ship it back and forth. Plus, they keep chain of custody the whole time. Just makes everything easier, right? Aren't we going back local now? Aren't we not relying as much on international trade? Hasn't that been the trend? Also with output and China turning more to its domestic production market, even outside of gold, in terms of goods and services, and trying to build their own middle class. See, this is a trend going on around the world, and now gold is following it. The Philippine Central Bank, for instance, is a certified LGD refiner. Kazakhstan has 2 refiners accredited by the 𝙼𝙀𝙀. Russia had 7 until they were suspended in 2022. But you know what? If Russia is going to do their own gold exchange, they won't need the 𝙼𝙀𝙀. In fact, the next article I'm going to show you, or 2 articles ahead, I'm going to talk to you about how Russia is investing in its own exchange because the 𝙼𝙀𝙀 basically pushed them out a few years ago when the sanctions started. All we're doing when that happens is giving a reason for the rest of the world to set up their own markets. So the sanctions and things aren't necessarily having the original intent of the statesmen that put them into place. And simply the rest of the world, including the BRICS nations, are saying, okay, we'll just build our own markets. We don't need you anymore. Another compelling driver for buying domestic gold is monetary flexibility. Purchasing gold through an international market often requires dollars, a reserve asset. Central banks must reserve one swap for another. With rising global debt levels, trade and geopolitical risk on the cards, central banks want to strengthen their reserve buffers. Out of the 73 central banks surveyed by the World Gold Council, around 95% said they expect peers across the world to raise gold reserve this year. Okay, moving on to the next article. According to the Moscow Times, Russia moves to nationalize country's third largest gold mining firm. Now, they used a potential scandal to do it, but this is just an opportunity for the state to say, we need to further secure our domestic supply so that we can take it into our monetary system and on our new exchange, which I'll get to here in a moment. Russian authorities moved to nationalize one of the country's largest gold producers, according to the Moscow Times, the latest example of the Kremlin's wartime campaign to seize key private assets. The case targets, I'm going to say South Ural Gold, I'm not going to say the Russian name, the country's third largest gold mining company, which is controlled by billionaire Konstantin Strukov, the deputy chairman of the Chelyabinsk Regional Legislative Assembly and a member of the ruling pro-Kremlin United Russia Party. So he's political and he owns gold. Interesting. The Prosecutor General's Office lawsuit reported Thursday by the state-run TASS news agency comes after Federal Security Service agents raided the company's headquarters and sites linked to Strukov and the Chelyabinsk region. Prosecutors allege that Strukov used government position to illegally acquire control of the South Ural Gold Company. A source cited by the RBC News website said Wednesday's FSB raids stemmed from allegations of environmental violations, so on and so forth. So they seized the whole thing. Russia wants the gold. They nationalized a gold producer. I think they did it. They used whatever reason they could. And there you go. In a March report to President Vladimir Putin, Prosecutor General Igor Krasnov said companies already nationalized were vaulted at 2.4 trillion rubles. So this isn't the first one, by the way. Why would Russia want to nationalize its gold mines? I don't know, because according to Kitco News, Russia looks beyond gold as it plans to build a precious metals reserve. Oh, they're doing a reserve. Since 2021, central banks have bought an unprecedented amount of gold, significantly contributing to this year's rally to consecutive all-time highs, according to Kitco. The question now is whether the central bank can have the same effect on other precious metals. According to news reports published this week, the Russian government is considering spending 51 billion rubles, that's $535.5 million US dollars, over the next 3 years to replenish its precious metals reserves. The report stemmed from a line item in the government's draft federal budget published on September 30th. While gold has been an important asset in foreign reserves, the proposal indicates that the Russian government is looking to expand its holdings to include silver and platinum group metals. This report came before they nationalized the mine. Now you can see why they wanted to do it. The formation of a reserve of refined precious metals as part of the state fund of Russia will help to ensure a balanced federal budget and stable economic development, as well as meet the industrial needs of the Russian Federation in the event of an emergency. The Ministry of Finance was quoted in an article by Interfax, translated to English from Russian. Central banks stopped accumulating silver in the mid-1850s, and the world had moved off the silver standard in the 1870s, but Russia is now considering silver as a reserve asset. William Middlecoop, founder of Commodity Discovery Fund, was the first to highlight the report on social media. He said that while 60% of silver demand is from industrial applications, investors shouldn't completely dismiss silver's role as a monetary asset. I'll leave you to read the article more in silver, but it's interesting to see how Russia has gone all in on both. Now, according to RussiaPivotToAsia.com, we have an article on July 14th, Russia to begin trading gold on St. Petersburg Exchange. The bullet point on this article is BRICS economy, Eurasian Economic Union, finance, Russia market, so on and so forth. You can see the connections there drawn in the pivot to Asia. Russia, the world's second largest gold producer, according to the article, is to free itself from the current dependence on gold prices at the London Stock Exchange and plans to launch gold trading on the St. Petersburg Exchange by the end of the year. Now, Russia can still trade on the LSE, not the LBMA, but they're moving completely away from that market, and they're going to build their own. This is very important. One of the main objectives of the exchange when launching a new market is to ensure the formation of representative indicators of a competitive market price. Until recently, gold market participants relied on price benchmarks set by the LSE. Now the LSE will face competition. We noted in the gradual movement away from the Western-based trading and research facilities within the Russian establishment of the Institute of Oil and Gas Initiatives, which is partially designed to be a competitor to the American Petroleum Institute. In this case, the UK doesn't produce any gold, whereas Russia has significant reserves of the metal. However, London does have a massive repository of foreign gold, as has New York, but it doesn't own apart from its own reserves. Meanwhile, Russia is not only one of the largest gold producers, number two, but also stores its own gold in Russia. That means that Russian gold purchases for storage in its own reserves instead of storing currencies from unfriendly countries has become an important step towards de-dollarization. What did I say at the beginning of the video? And financial independence. What did I say at the beginning of the video? Getting out of U.S. treasuries, getting out of the U.S. dollar. It continues, ladies and gentlemen. As a result, Russia may be able to reduce its dependence on the price of precious metals issued by the LSE. So in other words, no thanks, London. Thanks for putting the sanctions. We've revamped the market, and we're going to do better by doing it ourselves. Methinks that the sanctions and the decision of the LB made to exclude Russia just spectacularly blew up in the West's face, because now we push them to independence in their commodities markets. That's only going to help them. It's not going to help the West. Okay, you get it? It's not going to help the currency markets, the trade markets, the dollar, or the treasuries, or any of it. And that's what's happening. 𝙎𝙬𝙁𝙁𝙄𝙇𝙄𝑼𝙏, managing director of 𝙬𝙬𝙁, which is the new exchange, said that the Russian government has been creating a national system of price indicators for key commodity groups, including precious metals. In the gold market, our goal is to ensure the formation of national price indicators that are independent of international benchmarks based on the balance of supply and demand in the Russian market. Why wouldn't they do that? They're the second largest producer. Why would they go to London or the UK, which doesn't produce and is trying to set prices, when they're the second largest producer, can buy it locally, do their own exchange, and set their own prices? Why was this not done 50 years ago? Well, it's being done now, and this is going to fundamentally change pricing away from the LBM and the COMEX into these international markets, including China, Dubai, Russia, India. It's coming. What have I said for years? It's coming, it's coming, it's coming. Well, guess what, ladies and gentlemen? It's here now in July of 2025. Russia already has its own gold exchange at the Moscow Stock Exchange, which is a large physical metal trading session used by both banks and the central bank. The duplication of the exchange in St. Petersburg will also be open to BRICS countries and their traders, and creates an alternative to Western markets, which has been noticed by other central banks. The European Central Bank has recently commented that gold has overtaken the euro as the second most traded financial commodity after the US dollar. Let me read that again. The European Central Bank would know, because they issue euros, has recently commented that gold, ladies and gentlemen, has overtaken the euro, a power currency, as the second most traded financial commodity after the US dollar. If you have your neighbor that tells you gold is an old relic and it'll never have its place in the financial system, show them that one comment from the European Central Bank, how gold has overtaken the second most powerful currency in the world. I'm sorry. If you need further convincing than that gold is firmly entrenched in the world financial system, I don't know what else that you're going to need. It's blatantly obvious by now. Well, let's get into an analysis of gold. I like to do a technical analysis. So here I've got a chart of gold dating back to about 2000. This is when it started to make its big run. Gold since 2000 has done better than most of the other indices, most of the stock market indices, most real estate bonds, with some exceptions here and there. But as an asset class, gold has done exceptionally well in that time frame. And if you look since 2024, near the beginning of 2024, gold has gone on this massive historic run. If you look anywhere else on this chart dating back to the 90s, and if you even go back 71, let's say we go back, further, let's go all. Do you notice any point in time, any 2 year, 1.5 to 2 year point in time, actually 1.5, 18 months, any 18-month period of time on this chart where gold has made as big of a move, either in real dollar terms or percentage terms, as it has in the last 18 months? And the answer is no, because this move, as a result of the financial crisis, took 3 years. This one took 1.5 years, and it's just as big. And that tells you where the world is going. It's going to gold. And I could stop the video right here, and we wouldn't need to do anything else yet. We've got more. Key takeaways from JP Morgan. This is their view on gold in 2025 and 2026. It ain't stopping. They asked the question, their global research firm, will gold prices break 4,000 an ounce in 2026? Key takeaways from the article. Gold prices have surged in 2025 with President Trump's focus on tariffs pushing the metal to fresh highs. Actually, it wasn't just the tariffs. They've been going on since 2024. So we'll ignore the fact that JP Morgan knows that, and they're not saying that we're in a raging gold bull market and just blaming it on tariffs, because it started way back when. In fact, it started back in 2000, but that's okay. We're interested in their prediction. Longer term, the 2025 and 2026 outlook for the precious metal remains bullish. Prices are expected to average $36.75 an ounce by the fourth quarter of 2025, according to JP Morgan, and climb towards $4,000 by mid 2026. That'd be a $500 price increase about from where it is now. That's huge. It ain't stopping. And look at where it's already gone. We're currently trading about 34.11, 34.12. That's almost another $600 by about a year from now. Is the stock market going to do that? Is the dollar and the treasury going to do that? Probably not. I mean, could, but probably not. Central bank and investor demand for gold is set to remain strong, averaging around 710 tons a quarter this year. Very interesting article, and I had a few comments based on what's going on. Back in 2018, I think it was April 2018, I wrote an article and did a video on the upcoming new financial system, the central bank digital currencies, and now I would amend that to say CBDCs, central bank digital currencies, and stable coins supported by the state. If you look at both the Genius and Clarity Act going on in the United States, it is very clear that the U.S. government wants to make stable coins backed by U.S. treasuries. It wants to do it through the banking system, and it wants to exclude competition. Only a few banks really are going to be able to raise capital and build this. And so they're turning it into basically a state and a state bank collaborative run currency to support the U.S. dollar and treasuries. Why are they doing it? Well, the whole part of this previous episode, I said why. People are de-dollarizing. The United States is doing stable coins because the world's de-dollarizing. The rest of the world may be involved in stable coins, but they're not doing that, are they? And they'll have CBDCs. But their internal wealth they're doing through what? Gold. And they're democratizing the gold markets to reset prices because they don't believe the prices that we have in the West. I've said manipulation. People think I'm crazy. We have the government of Russia, the second largest producer in the world, in articles publicly stating they don't trust the prices. They're building their own exchange. They're nationalizing the gold mines. They're internalizing it, and they're not letting it get out. And they're going to service the rest of the world who does not believe in the gold price. Why did they say that? Because they know it's manipulated in the West. What other evidence do we need? We need none, ladies and gentlemen. We know what the evidence says. And we know where this is going. It's going to be to an eventual dollar crash, a treasury crash, and a shift into digital assets. And if you don't feel comfortable with that, another fiat currency, and one that's purely electronic, that can be controlled by a push of a button and offers zero privacy because they don't, because they're on a public ledger, which every transaction you ever do will be on there, then it may behoove you to think of doing similar things to what Russia and China are doing. And China did this 30 years ago. Russia's doing it now, in taking control of the domestic gold market, keeping it in-house, encouraging their citizens to buy it, bolstering their currencies and everything else with it, and doing whatever they can to get out of this dollar system. It's very clear what they're doing, and we see it moving forward. We'll continue to follow this on the channel as we go forward. Thank you so much for tuning in to the Freedom Report. This has been your host, Rob Kientz. Until next time.